Hey everyone, Jordan Lee here with Jordan Lee Mortgage, and I wanted to talk really quick about the upcoming end of forbearance and the potential impact that may or may not have on the housing market. To start with, I just want to talk briefly, really quick, about what the actual end of forbearance means coming up in September. So here I'm at the Consumer Finance Protection Bureau's website, which talks about forbearance here a little bit. And basically, the final deadline for applying for initial forbearance is September 30th. So some loans that are in forbearance will be ending in September, but folks will still be able to apply as late as September. They might not be able to get as long of extensions as they are now. It might be shorter, 3 to 6 month term. And actually, if you're in a Fannie or Freddie loan, you'll be able to. There's no official end of time that you can apply for forbearance. So yes, loans are tailing off of forbearance and will have to come out, which means that you'll have to either settle up with a difference or modify, get into a payment plan. There's a few different options, but suffice to say, it's not some sort of cataclysmic event that'll a bunch of people are immediately going to go into foreclosure right away. So there's really three big reasons why I think that the end of forbearance coming up here in September isn't going to be a major market mover. One of those reasons is that there's just a substantial amount of equity in homes. So when you have equity in your home, you do whatever you can to keep that equity, and if you have to, you'll sell it for a profit. You're not gonna foreclose. The second reason is that there's just not that many people actually in forbearance. The number is less than 4% now. And thirdly, the loan performance insights came out from CoreLogic just recently, and there's not that many people delinquent on their mortgages as well. So the first report I'm going to show you from CoreLogic is on equity. So right now there's a record amount of equity in the United States, something like 2 trillion, which is up a ridiculous 20% year over year. And but what's really interesting to me is negative equity. So that's when you're underwater, and if you were to sell your home, you would have to pay money in order to sell that home successfully. Well, as of the end of first quarter, negative equity fell by 24% on a year-over-year basis, and there's only 2.6 of all mortgage properties are underwater, and of mortgage properties of homes in the U.S., only 2/3 of them are actually mortgaged. So that number is even smaller than 2.6%. And really, this was at the end of first quarter, and as we all know, home prices have increased since then. If we compare this to the previous bubble, where home prices dropped significantly, the peak was 26% of mortgage residential properties back in 2009, end of 2009, had negative equity, which it's crazy to think about. So next up, I want to look at the forbearance report that came out the other day, and that just kind of shows us how many people are actually in forbearance. So this is a report that I tracked that's released weekly from the Mortgage Bankers Association. It's a survey that goes out, and currently the number of people in forbearance, the percentage of loans in forbearance is down to 3.76%. For FHA or Ginnie Mae loans, the percentage is a little bit higher. It's closer to 5%. And private loans, it's even higher. But for Fannie Mae and Freddie Mac loans or conventional loans, the ones that most people have more than the others, it's down under 2%. So, ultimately not that many people in forbearance. And of that less than 3.75% or whatever, something like 24-25% of those folks are still making their payments. So even though they're in forbearance programs, they're still continuing to make their payments. So the last set of data that I want to look at is the loan performance insight from CoreLogic, and this report comes out monthly. It's delayed report, so this data is from back in April, but it gives you a good sense of how many days late folks are on their loan. This doesn't include data on second loans. It's only for first loans, and and remember, a third of homes are owned outright. So this is only tracking homes that actually have mortgages. And you'll see that year over year, the number of folks that are delinquent meaning they haven't made their payment for 30 days or more, or they're behind, has decreased by 1.4%. Pretty nice drop. And if you look at this larger chart that tracks, there's varying levels of delinquency, right? So 30 days late, 60 days late, 60 plus, 60 to 90 days late, and then seriously delinquent here. You'll see the pink number is from last year, the bluish purple number is from this year. So you'll see the trend, it's trending lower, except for there are some folks that are over 120 days past due. And finally, people that are actually in foreclosure, it's 0.3%. So right now, 0.3% of 1/3 of 2/3 of the homes in the United States are in foreclosure. And we'll see that number will probably bump up a little bit here as these folks move towards this category. But again, it's not like simply add this to that. That's not how the forbearance runoff works. So again, I just wanted to quickly go address the forbearance, talk. A lot of people think that there's going to be a huge open up of supply when that happens, but just remember that it's not a cliff. There's not a cliff of forbearance. It's going to be a slow runoff because different folks started it at different times, and different programs allow you different extensions, and you can still apply for forbearance as late as September on government loans, and there's no end date yet for Fannie or Freddie loans. So, and in addition to that, there's a lot of positive, strong equity in homes right now. There's less than 4% of homes are in forbearance, and really the number of people that are delinquent on their payments is coming down on a year-over-year basis.